We've got a positive hurricane of sorts going over the markets, and it's caused by one man. His first remark since President Trump took a swipe at his policies. Federal Reserve Chair Jay Powell gave a speech today, didn't make waves at all, but his dovish remarks pushed the major averages to record highs, happening right now. While the central bank does not want to halt economic momentum, it also wants to ensure that there isn't runaway growth. He said, "I see the current path of gradually rising interest rates as the Federal Open Market Committee's approach to taking seriously both of these risks." Okay, it sounds a little bit like Fed speak. Let me translate it for you. Nothing's changed. But with none of the major global central bankers, say, for example, Mario Draghi of the European Union or Haruhiko Kuroda of Japan making the trip, is Jackson Hole a bit of a disappointment? Does it still pack the punch? We bring in former Richmond Federal Reserve senior economist Ward McCarthy, along with our traders at the New York Stock Exchange and the CME Group on a very big market day. Ward, I see nothing else that would trigger such strength in the markets than what Jerome Powell said and didn't say. Did it surprise you that he really didn't even take on President Trump? He's just walking the path that he feels is appropriate right now.
Well, he's letting other people take on Donald Trump, Esther George being one of them. But basically, Powell did two things today. He explained why the Fed is raising rates gradually, and he described it as being risk management approach to policy that should avoid major policy mistakes. And then he gave himself an A for what the Fed has accomplished by saying that, the dual mandate is maximum employment and stable inflation. And he said it himself. If most people who want a job can find one and inflation is stable right near our target of 2%. So all is well at this point as far as Powell is concerned. And he intends to continue to gradually raise rates, actually to neutrality, which is about 100 basis points above this. And based on the most recent forecast, somewhat above neutrality by about 50 basis points.
Yeah. So I heard two more in his speech. What did you hear? Two more rate hikes this year?
I think probably two more this year and 3 or 4 next year.
Okay. Tim Anderson, let's talk about the stocks and how this is a very broad-based rally. It looks, and I'm checking my sectors right now, but a lot of sectors are in the green at the moment. We do have real strength across the board, especially in energy, which may have something to do with perhaps the Iranians being forced with the sanctions to take more supply off the table at some point. But tell us the sort of texture that you feel from buyers who are coming into this market right now in this final hour.
Well, clearly, investors are comforted by Powell's remarks today, and they're also very encouraged by the strong macro data on the economy and a very strong, really closing week of earnings season, mainly from the retailers, which had almost been written off for dead at the end of last year. And even those retailers that have had negative price movements after their earnings reports has almost been a sell on the news type of an event where a lot of these stocks are up maybe 40, 50, 60% year to date.
Yeah.
And a lot of times you're going to get some selling even on strong earnings. There have been a couple of disappointing comments. Clearly, it's a space where you've really, if you don't get it right, you're going to be punished. But strong on both the macro and on the earnings front
Scott,
this week.
We're seeing equities jumping, but something we don't often see at the same time is when gold, which is considered somewhat of a safe haven, also spiking $17. Why?
Well, we're seeing, a little pressure on the dollar. We actually saw it trading in the 94 handle earlier today. So
and
that
I don't
obviously
get that
is
either
helping.
because rate hikes are dollar positive usually, right?
Right, exactly. And it may just be a selling the news type of event here. But I know that the yuan really had quite a rally this afternoon. So, that may be playing into it as well. You also, Liz, may be seeing just some bottom feeders coming into gold. I mean, God, this thing was just left, out in the wind here, and we're up, $40, $50 off of the bottom. So, I think it's probably a very short-term rally here. I wouldn't say that we're out of the woods by any stretch of the imagination.
Okay. Hey, great to see all of you guys. Have a good weekend.